What if I told you that the world is facing an extreme debt crisis right now and that most countries are actually, well, totally broke? And I know that with all the other stuff going on, it's hard to even have like mental space for more market insanity. But there it is. It's true. The debt crisis is real. The debt crisis is getting worse by the day. But why does it matter? And what can you do to protect yourself? My name's Lark. I make videos on investing. If you do like that topic, then subscribe to the channel. And of course, leave a little thumbs up. Let me know you appreciate this kind of content. And by the way, my team and I make the Wealth Mastery newsletter twice a week, and we send it to your inbox. We cover opportunities for you to consistently make money in any market conditions with crypto, altcoins, DeFi, NFTs, and much, much more. Our members love it. I'm sure you will too. Sign up using the link down below for free. So, what is a debt crisis? Well, a debt crisis is when a country is unable to pay back its government debt. You see, governments should work just like a business or, maybe a household with a budget, right? With enough income to cover all their expenses. The taxes we pay, in theory, should cover everything that a government needs. Infrastructure, military and defense, welfare, and of course, the interest payments on any debt that they currently have. But is that the case? Well, the answer for many countries is no, they do not. Governments all over the world are spending more money than they're taking in. For example, the last time the US had spare cash on hand was over 20 years ago, all the way back in 2001. And it's all been downhill for there, with the US national debt getting close to topping $31 trillion. So the current US situation, total federal debt is $30.8 trillion, US GDP $24.8 trillion, that includes all federal, state, and local debt, giving a total US deficit of close to $6 trillion, meaning that the current US debt to GDP ratio is 137%. Yikes. And remember, that's just the GDP. That's not the tax revenue needed to actually pay down all that insane amount of debt. We have seen the US debt grow by a huge 35% over the past 3 years. You think that has anything to do with the fact that 40% of all US dollars were printed since the pandemic due to quantitative easing? Just a thought. So how did we get here? Well, the world operates on a debt-based system, and each economy within that system needs more debt to keep up the appearance of growth. Think about keeping up with the Joneses, but the country version on steroids. Governments take on debt by issuing out bonds and treasury bills so that they can then spend more, look good, and of course get voted in again, kicking the can down the road for the next guy to have to deal with. So is everything actually spiraling out of control here? You bet it is. Remember, money can either compound for you or against you. And in the case of such eye-watering debt, we must face the reality that the debt crisis is quickly becoming a debt spiral and working against governments. So we have basically a situation where countries, companies, or individuals are seeing these perpetual increases in debt, and it becomes unsustainable, eventually leads to default. That's the debt spiral. And while it's hard to imagine a major economy defaulting in modern times, somebody at some point is going to have to deal with these insane numbers. 31 trillion. What's that? How does that even get paid? But the last decade has been basically a decade of kicking the can down the road, with interest rates held at historically low levels. Governments have been able to get away with a lot, and they've been able to get their hands on essentially free money, until recently anyway. This new money allowed for more government spending, and so the debt just kept rising, and nobody really thought about it too much. And whilst it's free money for them, that money certainly isn't free money for you and for me. We pay for it with increased taxes and increased inflation. Anyway, the increase in the interest rates in previous months has been an attempt to try to fight that inflation, but it's also made it more expensive to borrow new money, and most critically, to service existing debt. Because as interest rates go up, so do the interest payments on the $31 trillion of debt, man. This means that economic growth will slow. It means the government revenue will fall, which will mean that they end up having to borrow more to cover the increasing deficit. And you keep repeating and repeating and repeating until the rotten system collapses in upon itself. A recent study by the World Bank, well actually that's the reason, back 2010, but anyway, they found that countries with a GDP to debt ratio above 77% have basically exceeded the tipping point for growing their way out of the debt. With each percentage point of debt above the tipping point, economic growth slows by 0.017% annually. Think about how that can compound, right? That's crazy. So with US debt to GDP ratio at 137%, that's well beyond the sustainable level. It's a race to the freaking bottom. The only thing probably propping up the US at this point is the status of the US dollar as being the global reserve currency. But even that status is being challenged by the BRICS nations and Saudi Arabia. And of course, the future of the US dollar as the cornerstone of international trade looks far from certain. So what can you do to save yourself? Well, you may have noticed the following. Monthly card payments start increasing. Credit card repayments are becoming more and more expensive. You're seeing increased energy and utility bills, all thanks to inflation. So to save yourself, you have to stay away from unnecessary consumer debt where possible. And if you are borrowing money for anything, try and get a fixed interest rate and try to avoid variable interest rate loans. Also, try to save as much of your income as possible. I know it can be hard to do in these kind of economic times, but the aim here is to put yourself in the best possible position to weather the economic storm that's brewing. Cash will be a necessary part of that, and also allow yourself to be able to invest when prices are lower during all of this economic chaos. And that, of course, make sure to be investing. Make sure to own hard assets like real estate, of course, which can create passive income and whose rent will likely increase in line with inflationary pressures. Also, strong defensive stocks for key industries like energy, utilities, metals, household goods. Those will be good for weathering out the storm, particularly ones that pay dividends. Store of value investments like metals and Bitcoin, those are always, of course, going to be fashionable. I just keep on stacking Bitcoin, rain or shine. Anyway, what do you think about the debt crisis? Is it something that investors should be concerned about, should be worried about? Or do you think the debt crisis, big fat nothing burger, it's only 31 trillion bucks. They'll figure it out at some point. They'll just print their way out of it. They'll find a way to pay it. Doesn't really matter. Or is it a damn big deal? Let me know down below in the comment section. Thanks so much for watching today's video, and peace out till next time.